mentor. 3 weeks later, no video. 3 weeks later, no video. I apologize. I really do apologize, but it's mainly because we were really not active, because we were really working on improving everybody's trading journey and everybody's skill under the Fiscal 3.0. So yeah, I'm not saying that we're done, but we're still busy with that. And whilst we're still busy with that, I'd like to also just inform you that each and every single course under the 3.0 is out of Black Friday. It is a pity, but I'll also talk about that later in the video. But I don't want to really dwell into holding you guys on to the intro for a long time. We're doing a VIX video. I'm going to get into the nits and grits of the whole video. So without any further waste of time, let's get into it. Okay guys, now that we have gotten to this part of our video, the chart part of our video, we're going to be diving into looking into the volatility market, of which is the synthetic market. Remember that the VIX market is created and established by the Rev people out in the USA, and they ended up even opening up a broker, of which is called the Rev, and that is where you're going to find all of your synthetic indices that you want to be trading, right? And then another thing that we do on VIX, the volatility market, remember that the VIX market is not moved or rather influenced by anything, any factor at all. It is basically algorithms and market charts just basically painting out a picture, right? It is a simulated market. It is something that is created to be moving like that. So the reason why we capitalize the most on VIX is because of the patterns of which we find under the VIX market. These patterns, remember that we can have our normal, let me just quickly draw for you guys an example here. Remember, we can have a normal W of which is like this, and then we can have a W of which is like this, but it is still a W. Remember, we can still have a W of which is adjacent and like right angled, and then in most cases these are the kind of patterns that you would be getting from VIX, because these ones in most cases would be influenced by something, would probably be influenced by a market move or manipulated by a broker or something. But this is the kind of setups that you could be and will be getting on the VIX market. So without wasting any of your guys' time, let's get into analyzing VIX market. Let's analyze the VIX market. Remember our traditional top-down analysis. We start from our higher time frames and move over to our much lower time frames, right? So we obviously start out with drawing in our resisting price, because we know that if we have marked out our resisting price, we know that market is not above this line, meaning that we're still in a seller's market. So anything that is happening below this line, it is selling, right? Anything, even if we have moves like these are just grabs. This is just market grabbing a higher price. Remember that there is just a pullback in the market, but right once market reaches a certain point, still under that overall trend line of ours, once it reaches that point, we fall. So that's what we can see happening here. It's been repeating the same kind of setup. Since market comes to reach a high point in the market, we drop. So let me just clone that trend line to have our supporting price over here. Let me just do this. Probably cater for those first few touches, right? So I can see that market came to create a low, but it failed to actually conclude that low over there, but we actually reversed. And once market reversed, there is a point. This is what we call the point of interest. We have to actually pay close attention to those supporting prices over there. So we can already see this is what we have on an overall downtrend, right? We're in a seller's market. So if we're in a seller's market, we can only anticipate our buys, our overall buys coming in only above this trend line over here. So if market would come to retest above this trend line, we know that it is no more in a seller's market, it is rather in a buyer's market. And once in a buyer's market, we could be looking for overall bullish moves. So with having that said, what we do next, we dive deeper into our lower time frames. Okay, now that we can see we're in our H4 time frame, we can see that market is painting some sort of like there's a lot of, let me say it, we don't really have an overall direction over here, right? So knowing that we don't have an overall direction over here, what we want to do is simply look for patterns now, right? Remember that we don't have an overall direction, so I can see that overall here we're having a resisting price over here. So if we have a resisting price, I want to be marking that price. I know that once market reaches that point in time, we should be selling. So after selling, we know that we're in a clear seller's market. So anything below this zone over here is a sell. So we know that our sell was already played out, but it is not really done, because this was our previous point of interest. Remember, on our 24-hour chart, we saw that point of interest. So knowing that we're still under a seller's market, so let's just plot in our trend lines. So I'll try plotting my trend lines over here. So I'll take my first few trend lines over here. We have a falling wedge and a descending structure over here. And then I cater in for our overall move. So market broke out of this overall bullish move, and after it breaks out of, remember this is just an exhaustion on a higher time frame, and so after it breaks out of this, we see that we didn't really push to get a retest, but market actually tested out some of our previous turning points over there. Market tested in that price over there, of which is a previous turning point. Then we can see throughout our highs and our lows, market is properly trending towards the downside of the market. And then if we also pay very close attention to what we have over here, we can see that market is painting some sort of a reversal pattern, of which we call a head and shoulder. We can see our first shoulder was created over here, and our head price was over there, and our shoulder price is over here, another shoulder price. And after that shoulder price, we're having some sort of a neckline price over here, and then this is our neckline retest. And then after our neckline retest, we got more lows, and after these lows, we had our higher low. And after this higher low, we're expecting a lower low, of which is lower than this previous low. So that is what's currently happening on our VIX market at the moment. So we can be expecting further pushes to the downside, right? Expecting further pushes to the downside, but those pushes to the downside are not necessarily our overall move. I want to show you guys the importance of actually catching your overall move in the market. If we catch this, if we can look at this actually in another view, let me just, okay, if we can just look over here, all of us I'm sure watching this video know of this pattern that is actually being played out, or trying to currently be played out. Remember that if we're still in a seller's market, if market comes properly to test this level of resistance, you can see it's actually a level of confluence market. This was our overall downtrending resistance, plus this rejection of our zone that we created over there. And if we can properly drag that zone out to the left, you can see that it also bounced in on the left side of the market. But that's besides the point. The point is that we see our level of interest that we were looking at over here. Market then exhausted back to our resisting prices to only fall after. And we can see that if this is what we see when we open the market, we can realize that we're already late for ourselves, meaning that we don't chase the market. We rather wait for the market to come present a proper setup, and then we take the setup and then we move with the setup. So let me just take this out to not create some noise, and I'll take this one out as well to not create some noise. So after that, you can see that you can have your buy limit, a pending order on your level of support, of which is this price over here, 43330.9798 could be your pending order of a buy limit. And then once you go in with your buy limit, you have your highest turning point of that overall downtrend as your as your final TP, as your final target. And then obviously you can have the medium and low turning points in the market as your other TPs in the market, as your other target prices in your market. You can just have this overall as your first, and this as your second, this as your third, and this as your final TP. So this is how we would catch our overall move in the market. This is how we catch our overall move in the market. So I don't want to actually take time to dive into other time frames and other charts and not, because this is the method that has been proven to work countless times on the VIX market. And then I'm not sure if you guys want a trading video on VIX or not, but we can actually cook a trading video if you guys would like that. If you would, just please comment down in the comment section, and then we'll make it happen. But yeah, without wasting any of your guys' time, this is Coach, your mentor, and I'm signing out.
What's up, everybody?